Before we begin explaining what Forex really is, let's address a common belief. Many people think that Forex is a scam. They've heard stories about people losing all their money, being promised quick riches, or joining so-called investment programs that disappear overnight. Let's get this straight. Forex itself is not a scam. It's a global financial market, one of the biggest in the world. But just like any profitable industry, there are scammers who take advantage of people's lack of knowledge. Here's an example. If someone tells you to give them money so they can invest in gold, and then they run away, does that mean gold trading is a scam? No, it means that person is a scammer. It's the same with Forex. The market is real, but some people use it as a tool to trick others. So the problem is not Forex itself, it's the way people approach it, often without proper education or by trusting the wrong individuals. Now that we've cleared that up, let's get into what Forex actually is. Point 1. Forex means foreign exchange. Forex stands for foreign exchange, or in simple terms, the exchange of one currency for another. It happens every time you travel to another country and swap your local money for theirs. For example, if you're in France and you go to the US, you'll need to change your euros into dollars. That's a Forex transaction, but traders do this on a much larger scale, trying to make a profit from the changing prices of currencies. It's like buying dollars when they're cheap and selling them when they're expensive. Just like how shop owners buy goods at a low price and sell at a higher price, Forex traders buy and sell currencies to make money from the difference. Point 2. The Forex market is the biggest financial market in the world. Yes, bigger than the stock market or cryptocurrency market. Every day, more than $7 trillion is traded in the Forex market. That's more money than most countries' economies move in a year. Big players in the market include central banks like the US, Federal Reserve, international corporations like Apple or Toyota, hedge funds, and also individual traders, like you and me. So you're not playing in a small game, you're entering a market that never sleeps, running 24 hours a day, 5 days a week. Point 3. You don't need to be rich to start Forex. Here's a big misconception. Some people think you need thousands of dollars to begin trading. That's not true anymore. Today, because of leverage offered by brokers, you can start with as little as $10 or $50. However, and this is important, starting small doesn't mean it's easy money. Leverage can multiply your gains, but it can also multiply your losses. This is why education is everything. You wouldn't drive a car without learning how, so don't jump into Forex without training either. Point 4. Forex is not gambling, it's strategic trading. A lot of people say, Forex is just gambling. That's because they've seen others enter trades blindly, without a plan. But true Forex trading involves analysis, strategy, and risk management. For example, technical analysis is studying charts and past data. Fundamental analysis is following news, like interest rate changes or inflation reports. Professional traders don't guess, they make informed decisions. Think of it like a football coach. If he knows the strengths and weaknesses of both teams, he can form a better game plan. Forex works the same way. With the right strategy, you increase your chances of success. Point 5. Learning Forex is a journey, not a quick fix. Let's be honest, if you think Forex will make you rich overnight, you'll be disappointed. It's a skill, like learning to be a doctor, a musician, or a software engineer. It takes time, practice, and discipline. Yes, people are making money from Forex, but they've spent months, even years, learning, failing, and improving. And guess what? That's okay. Every expert was once a beginner. There are demo accounts you can use to practice without real money. There are free courses, mentorship programs, and online communities. Start small. Forex Talk, where we break down the complex world of Forex into real, relatable lessons. Today, we're talking to beginners, those who are just hearing about Forex and wondering, should I try this? Or, how do I even begin? Before you jump in, let me share with you 5 essential things you must understand and consider before learning Forex. Because this journey is more than charts and candles, it's about your mindset, discipline, and clarity. And yes, we've got real stories and examples to make it all make sense. Point 1. Understand that Forex is a skill, not a shortcut to get rich. Let's get this straight. Forex is not a lottery. You don't press a few buttons and magically become a millionaire. Forex is a learnable skill, like learning to drive, to cook, or to code. Example: there's a young man named Eric from Kenya who started Forex thinking he'd make big money in 2 weeks. He lost $200 in his first month. Frustrated, he almost gave up. But then he decided to treat it like a profession. He gave himself 6 months to learn properly. Now, 2 years later, he earns $30 minus $50 daily, consistently. Not huge, but it's real and steady. Lesson: don't enter Forex expecting overnight riches. Come in ready to learn like a student. Point 2. Start with education, not real money. One of the biggest mistakes beginners make is trading with real money before learning. There are so many free and affordable resources out there. YouTube channels like Trading 212 Inches or Baby Pips. Free demo accounts from brokers like Exness, Deriv, or IC Markets. Telegram communities for discussion and signals. True story: a Tanzanian lady named Amina used a demo account for 4 months before ever risking real cash. She treated it like a real job, taking notes, learning why she lost or won a trade. Her first real trade, she made $17. That gave her confidence to build from there. Lesson: practice in a demo environment. Test strategies. Make mistakes where it doesn't cost you money. Point 3. Choose your mentor or source carefully. The Forex world is full of fake gurus, people who flash cars and money to sell expensive courses. But many of them don't trade profitably, they just make money by selling dreams. So how do you find the right teacher? Look for someone who teaches risk management, not just quick profits. Check if they show both wins and losses, because real traders lose sometimes. Look for communities that promote accountability, not hype. Example: in Nigeria, there's a mentorship program called Blue FX Academy where they show weekly P&L reports, real trades, real losses, real wins. Lesson: your source of learning matters. If you follow the wrong leader, you'll go in the wrong direction, fast. Point 4. Understand the risks, emotionally and financially. Forex is risky. You can lose your capital very fast if you're not careful. But it's not just about money, the emotional side is just as important. Downward trend when you lose a trade, how do you feel? Upward trend when you win, do you get greedy? Real life example: James from Uganda once turned $100 into $400 in 3 days. Excited, he risked more than 50% of his capital the next week, and lost everything. He said the hardest part was not the money, it was the feeling of failure. Today, he uses strict risk management, never risking more than 2% per trade. Lesson: Forex will test your emotions. You need rules and discipline to survive. Point 5. Patience and consistency beat talent. You don't have to be a math genius to succeed in Forex. But you do need consistency. Small, steady growth is better than chasing big wins. For example, Grace, a mother of 2 in South Africa, trades only 30 minutes a day. She targets $10 per session, and logs off. Over time, she built up a $300 account into $900 in 6 months. No hype, no big risks, just quiet consistency. Pushpin lesson: this is a marathon, not a sprint. If you stay consistent, the market will reward you over time. Conclusion: so, let's recap the 5 key things to consider before learning Forex. 1. It's a skill, not a shortcut. 2. Start with education, not your wallet. 3. Choose mentors wisely. 4. Control your emotions and manage risk. 5. Be consistent and patient. Forex has changed lives, and it can change yours, but only if you respect the process. So take your time, learn, practice, and grow. Mike, this is Rua Recap, breaking it down for real people, in real language. Don't forget to subscribe, share your thoughts in the comments, and keep learning. Until next time, happy trading.